Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Tuesday, July the 6th. The year's 2021. Let's talk trading. Bread and butter trades part 2. As always, these videos are for educational purposes only. Your results may differ from mine. Yesterday, we talked about how to find bread and butter trades, or where do you start? And the way I start is I look at statistics, and we looked at a few of the different ranges that I look at. For example, the daily range, high minus low. And then we have the high minus the open, the high minus the close, the open minus the low, and then the close minus the low. So we're looking at basically rat trades, buy zone trades, those type of trades. So before we get into the next step, let's just take a look at the weekly chart here. And you can see all the gaps filled. Right now we're 17 pips above the weekly open, 18 above the weekly low, and 65 below the weekly high. If we look here at the opening range chart, we've got the opening range for the month, which price is now dipped back into. You see earlier today it broke out of the opening range for the week, and now we're back within that range also. $192 pips, 191 pips above the yearly open, 10 pips above the monthly open, 19 above the weekly once again, and 1 pip below the daily open. Now, yesterday I talked about the range, and at a certain hour when I normally trade, the range is usually a certain size, but that size is usually smaller than the daily, what the daily size usually is. And I'm not talking about the average size, I'm talking about the usual based on frequency distribution. And when I looked at the charts, the 1 hour charts earlier today, like let's just go to one here, price was sitting somewhere around here, it was in the 60s. And I looked and I said, oh, wow, about 3 hours ago at the time, price had hit the 40 and bounced. I said, nah, looks like I should have put my should have put a limit order there and just bought at 40 before I went to bed. But then I usually don't like doing that because you never know what could happen. And so then this hour, as you can see, price came back down to that 40 level. But when it did, I looked left and I saw that it had already penetrated that 40 level once, twice, 3 times, 4 times. And I'm thinking, you know what? It's been hitting on that stone. I think on the next time it hits it, there's a good chance that it's going to bust through. Well, if you look down at the 1 minute chart, it hovered there for a while. In fact, we can go take a quick look at that. Let's see. We can look at it. Let's just use the wall mall. And you can see here how many times it poked through. 1, 2, 3, 4, 5, 6, 7, 8. And then just within that time, you could just see how price was just trying to go lower. And it's one of those things, it's like, yeah, you could say it's easy in hindsight, but by by knowing what it does, you can see how you can actually trade using that information. So in this case, rather than look for a rocket off of that 40, it's like, no, I'm going to look for it to dip down and then maybe come back and rocket off the 40. And that's how you use that. So let's go back to the other charts. Here we've got the buy zone. We have a pivot point that was missed. We took out the pivot pretty much from the get-go of the day. You can see right now we have a large enough range for the rats, 70.9. And so now the green rats start to look to feast. Now normally I'll have this on M5 or M15, but the thing about the rat zone is, if you remember the rule of thumb for my trading, one of my biggest rules of thumbs is not to trade against the H1 candle color. So yeah, you might give up some pips, but you might also stay out of trouble. So you just sit here on your hands for the next 10 minutes or so. Okay, 8 minutes or so, and just wait and see what that next candle does. If it continues down and tests the low and reverses, or if it just keeps moving up. But just so long as you enter the trade long somewhere in here, then pretty much statistics should work out in your favor. And that's all we're looking for. So you can see here, we hit that weekly pivot. So we took out the daily, we missed yesterday's. We've already taken out the weekly. And we still have the monthly sitting there at 39.53. So just have to kind of wait and see what happens. As far as the wick zone goes, we were in and out of the upper wick zone, not much of a lower wick zone yesterday. And just looking at the sweet spot horizontal lines, this is what this is for DSR trades, dynamic support resistance. So you can see here we put in a 3-ball and price is moving up. And one of the things we may have mentioned, you want to trade off a horizontal level. So you can see here this pushed down, so it's not really a trade, and it pushed down here, so it wasn't really horizontal yet. So here's where it's horizontal. Here it's horizontal. So if you took the 40, you had an opportunity to make 2 or 3 pips, and then price finally broke through. And so here it made a horizontal once again. So going long at the 30 gave you an opportunity to take a few pips. But remember, if you do, you're going against the H1 candle color. So that's why you just, grab 2, 3, 4 pips, be happy. You're going against the H1 candle color and you get out. So you see here, price broke this high, then it broke this high. So when it starts to come back down, just take your pips off the table, especially if you're just day trading. And here on the wall mall, it opened right here, right on the 60 just about. So it was pretty much a toss-up which way it was going. So if you took the long, you maybe had had an opportunity to take 3 pips off the table if you got in right at the open. Call it 2 pips, then it turned, you went with the new candle color, and it also broke out of the previous H1's low, came down here to the 40, meandered, and then pushed all the way down through the 30 and is coming back up. So, the main topic really is bread and butter trades. So, how do I pick this? Why would I do this DSR trade that I talk about as a bread and butter trade? It's because price has to do something. And then, when you run the statistics off of highs and lows and breakouts like we did, you just know that, hey, price has to do something. And so long as I manage my risk, if I'm wrong, I don't get hurt too bad. But if I'm right, there's pips to be made. And so once again, based on observation and then some statistical analysis. I know if I wait for that horizontal dynamic support here, and I know support is a concept, um, but and then using it in conjunction with the three ball, and in fact, all these dots here, these are basically three balls. This is what the three ball has done, because I took the dynamic support resistance indicator, and normally it's set to 5 to match the one ball, but I set it to 34 to match the three ball, and it pretty much shows you the movement of the three ball when it appeared and what happened next. So knowing that price, if it gets between two lines, it doesn't like staying between two lines, so it's going to have to exit one or the other. So it got here, it didn't get any lower, so once out of the 20s, so it moved into the 30s. And you can just look at the chart. Price just doesn't like staying between any of these sweet spot lines. And that's what Walmart based his method on. And you've seen the statistics on that. Oh, accidentally hit something there. So once again, we know during certain hours of the day, there's a higher probability, statistically speaking, that price is going to, these H1 candles are going to be greater than 13 pips, which means you could probably get an opportunity to make a couple of pips or more those hours. And of those of you that have been following Walmart and I doing the Walmart method, that's true. But, back to the frequency distribution indicator. In fact, somebody was asking me, what is that indicator? Well, the latest versions, the TRO 2021 frequency distribution display UI. UI stands for user input, because you've got a lot of inputs. You can, say what the level is. You can use weekly filters. You can use time filters. You can use day filters. Tell it how many bars to test, whether or not to use the absolute value. There's a lot of different things you can do with this indicator to run your statistical analysis. And it shows you the maximum, the minimum, the mean, which is the average, the median, which is the middle, and the mode, which is the most. So you can see here, we're looking at a daily chart. And yesterday, I had mentioned that about the buy zone or daily open cross. And if you remember, you can see here the daily open was at 35.8. And then when price came down, it came down pretty hard, and we actually hit 26.8. So seeing that price went across that daily open, that gave you about 0.78, maybe 9 pips that were possible on that daily open cross. And so maybe one or two of you who watched yesterday's video saw that happening today. And as you can see right now, price is just meandering right around that open. So we're gonna have to wait and see what happens. Does price go back up, or does it push down? Because at the time, the range was only about 60, and so it just added about 10 pips of range there, which is a nice trade. So fellow traders, that wraps it up for today. Fastest 15 minutes in trading gone by again. So maybe you'll have Walmart on tomorrow. He had some things he had to do, so he couldn't make it today. But just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.